I'm going to be going over my $28,000 growth portfolio. I'm very excited to talk to you guys about it, so let's take a look. All right, guys, so we're going over my $28,000 portfolio. One of the most important things to know about my portfolio is the point of this portfolio is a high growth portfolio. So for the most part, I'm not going to be investing in dividend stocks or ETFs. I prefer to do that for my Roth. For just my regular M1 Invest account, my focus is on high growth. So I have $28,854. I actually was supposed to make this video on Friday, and on Friday, this portfolio was actually $25,000. Now it went up almost $3,000. The market was just on a tear the last couple of days, and my portfolio like almost completely recovered. So this is the amount of money I have in here. It says my gain is 13.81%. When it comes to M1 Finance, they have a tendency of not putting the correct one here. If you want to look at your legitimate gain, it's supposed to be in your holdings tab. So my total amount that I put in was $26,465, and the value of the portfolio is $28,854. So it says I have a gain of $2,389 or 9%. If you guys look at my portfolio, I have 3 holdings in it. The first holding is a QQQ. I have an actively managed mutual fund called ARKK, and I have one individual stock, Tesla. This is the only individual stock that I hold. So let's go over a couple other things on here. So if you look at my portfolio, the earned dividends here is not representative of this portfolio. For this portfolio, I barely get 0.9% dividend return. The whole point is not a dividend return, it's about growth return. So for example, say I want to buy a house. I buy a house for $100,000 and I want to sell it for $200,000. So that appreciation, that capital appreciation, that's growth investing. You buy a house for $100,000, you sell for $200,000. Where dividend investing is you buy a house for $100,000 and then you don't care about the appreciation, you just care about the monthly payment. So you get $1,000 every month. So a dividend investor is looking for that $100,000 house that gets the $1,000 every month rental income, versus the growth investors, like you buy a $100,000 house and you want to sell for $200,000. So that's the simplest way I could describe that. This is the plan going forward for my portfolio. Again, I have a Roth IRA. That's where I have dividend ETFs and higher dividend plays, but I don't want to go over that in this video. So I have 3 holdings, and then let's just go over why I chose these 3 growth holdings. So the first holding I want to go over is the QQQ. One of the main reasons that I wanted to invest in the QQQ is it has a higher return than the S&P 500. So your S&P 500 usually nets about 7 to 10% return annually, where the QQQ can actually net around a 16% return. And the first reasons why I invest in this stock in itself is it has a higher return than S&P 500. So looking at this graph over here, the overall return is much higher. So this is the S&P 500 index, and this is the QQQ. You can see that the return is much higher than the S&P 500. So it nets about a 16% return, where the S&P 500 is anywhere between 7 and 10%. So that's the first reason. The second reason I like this ETF is it predominantly has the majority of its investments in technology. It's not a technology fund, but it predominantly invests in technology. If you look at their allocation, the majority of their holdings is technology. And then you have consumer, cyclicals, and healthcare. I'm an avid believer that if you want the highest return going into the future, you need to invest in technology and you need to invest in innovation. Those are my 2 investing models that you need to invest in. So that's the second reason. The third reason I like this is the market cap weight. So how it's capped. So for the most part, 53% of the portfolio is placed in the top 10 holdings. Why are you going to put your money in things that don't make you money? You know, diversification is important if you want like a smaller return, which is totally fine. But if you want to get a higher return, you want to put your money in that things that actually get you money. And if you look at these top 10 holdings, Microsoft, Apple, Amazon, Alphabet or Google, Facebook, Intel, PepsiCo, Cisco, and Comcast, these are very good companies. And going forward, I can see these companies excelling. So those are kind of the main reasons why I invest in the QQQ. If you look at the return over here, so just going back to the return, you know, it's been getting killed the last month or so. But if you look at the 3-year or 5-year or 10-year return, returns about 16% a year, give or take market fluctuations. And then if you look at this large cap index where it's comparing it to, this is close to what your S&P 500 is or your FANG stock. So you could tell that the return is almost 5% higher, which, you know, the difference between 5% is huge. So say you put $500 into an investment account every single month starting with zero. After 40 years, if you get a 10% return, you're going to have about $2.7 million. If you get a 15% return, you're going to have anywhere upwards between $10 and $11 million. So the percentages do matter. So again, my goal is to have a higher percent. So first reason, the return is higher than S&P 500, which that is it. The second is that invests in like technology. Like my goals is technology and innovation, whereas like this one predominantly is investing in technology. And yeah, so this is the QQQ. So let's go back to my M1 account. So let's talk about the QQQ. The return is phenomenal. Let's talk about ARKK. What is ARKK? So ARKK is an actively managed mutual fund. And it was ranked, it won an award in 2019. So I just want to close these out and talk to you about ARK. So it won an award for being one of the top rated ETFs, the new coming ETFs. So let's look at the total market gain. And this is, I'm not doing anything special. This is just comparing it in Google Finance. So you have your QQQ and then you have your ARKK. So ARKK has been around since 2014. So they've only been around for 6 years. But comparing the two returns, ARK is beating out the NASDAQ or the NASDAQ 100. So if you think about it, this return is higher than QQQ, which is higher than the S&P 500. And in my first video that I had, it showed you that, you know, most investors aim for that 7 to 10% return, which is awesome. But because I'm a younger guy, I have a higher tolerance for risk, and I'm okay with taking that higher risk for a higher reward. Like you only get a higher reward if you take the high risk. If you take the conservative route, you're not going to get a high reward. You know, you're going to get your income plays, you're going to get your bonds. It's totally fine. But you know what? If you want to make more money in the long run, you have to take some sort of risk. If you cannot stomach market volatility or the ups and downs of the stock market, you probably shouldn't be investing, and you should maybe just put your money somewhere else where you know where you can get a higher return. But you know, I'm a young guy. I don't care seeing my money down 50%. You know, this money is discretionary money where if I lost it, doesn't matter. But if it does gain, it's a huge win for me. So just going over, one of the main reasons why I picked ARK is because its return is phenomenal. It has even a higher return than a QQQ, which has even higher return than S&P 500. So in my video, I wrote out like a return if you had a 7, 10, 15, and 20% return if you put $500 away. If you put away $500 each month at a 7% return, you'd probably get about 1.2 million. At 10%, you'd have 2.7. At 15%, at $500 every month for 40 years, you'd have over 10 to $11 million. And if you get over 20% return over 40 years, putting the $500 away each month, you'd have $47 million. So the percentages do matter, and I'm trying to aim upwards above that 15% mark. My goal is to retire once I have $10 million. So going forward, the return is better. Now let's go on the actual website. So I'm going to get rid of this because I like to be organized and I'm a simple guy. So this is the ARK website. Why invest in ARK? So focus on ARK's belief that innovation is key to growth. The Ark Innovation ETF is built on the cornerstone investments that present the best risk-reward opportunities from ARK's innovation-based themes. So Going over the fund description objective. So ARK defines disruptive innovation as the introduction of a technology-enabled new product or service that potentially changes the way the world works. Companies with ARKK include those that rely on or benefit from the development of new products or services, technological improvements, and advancements in scientific research relating to the areas of DNA technologies, genomic revolution, industrial innovation and energy, automation and manufacturing, industrial innovation, the increased use of shared technology, infrastructure, and services, next generation internet, and technologies that make financial services more efficient, fintech innovation. ARK is an actively managed ETF that seeks long-term growth of capital by investing under normal circumstances, primarily in domestic and U.S. exchange-traded foreign equity securities of companies that are relevant to the fund's investment theme, disruptive innovation. So this whole ETF is all about disruptive innovation. So what does that mean? So if you look at history, what are things that disrupted the way that we live? Electricity would be one of them. Without electricity, like it would not be powering our phones, televisions, internet, any of that stuff. Without electricity, it would be nothing. Then if you look at assembly line, you look at cell phones, you look at internet. Those are things that once they got introduced into our economy, it changed the way everything went after that. Everything is related to, technology, every little healthcare, every single job, they're trying to innovate in technology, and that's the way forward. So they're looking for like the electricities, the cell phones, the internet of the upcoming future. If you look at the ARK performance, and this is as of December, the most up-to-date one is a little bit off, but if you look at the one now, the gain is about 15%. Let's just look it up real quick. And again, I was doing my little research for this, and it changes every so often. So if you look at the last couple months, again, this has been getting killed, but you look at the last 3 years, it's been having like almost a 24-25% return. And since this has only been around since 2016 or 2014, it hasn't fully been out the full it's been out 6 years, so it's not going to hit the 10-year mark, but it will hit the 5-year mark, which the return is 17%, which again is higher than the QQQ. And my goal is to hit above a 15% return every single year. I'm not going to necessarily go over what countries you're located in. It does have the majority of it in technology and then healthcare, and these are the top holdings. Tesla, really good top holding. I love that. And then this is again not a dividend play. So the couple of reasons why I'm investing in ARK is the first is return. Again, you always want to pick something that's going to give you the most return. The second reason is how they invest. They invest in those 5 different categories for disruptive innovation, and it's kind of like an S&P 500 for innovation. So they pick 5 of these areas out that they believe is going to bring the most return. If you actually go on the investor resource page, they have a bunch of different areas that they go over about the market capitalization of ride sharing, with automated driving, with Bitcoin, with CRISPR technologies, with genomics. So they go over all the market caps and how much possibly that you guys can return. So it'll be kind of a good thing to look at. I'm not going to necessarily go over it now, like I probably will in one of the future videos, but this is just one of the most underrated actively managed mutual funds to have. A lot of people don't talk about this, but this is a really good ETF to have. So it was one of the top 2019s for active ETFs of the year. So really good pick to have. And the final reason why I invest in ARKK is their leader. I'm an avid believer that if you have a strong leader leading the company, the leader takes the direction of the leader is the one that decides the direction of the company. And I believe Catherine Wood, who's the chief investment officer of that actively managed mutual fund, has it together. The reason why I got this, I saw her on CNBC talking about her different evaluations on different stocks, and one of the stocks she was talking about is Tesla, and she had a crazy evaluation of putting Tesla at $4,000 a share, and people were laughing at her. And there was a certain point where the Tesla stock did jump up and it was starting to creep up there, and then all of a sudden the illness started happening and a lot of things changed. But she was the one that was talking about all the different ways that they figure their analysis out. She believes that Tesla is not an automotive company. She believes that it's a technology company, and people are evaluating that company wrong. So I was looking into that, and she has some really good points, and I believe what she's doing is well. So that's another reason. So the three reasons why I invest in ARK is the high return, the where what they invest in. So my main motto is technology and innovation, and she's innovating, or this fund invests in 5 different disruptive technologies, and the third is really good leadership. That's the third reason why your company is hard to fail if your leaders aren't. If your company is hard to fail if your leader is doing the best job possible. So that's that. And my final and most favorite thing that I owned, favorite is Tesla. I love this stock. This is like one of my favorite stocks of all time. And I'm gonna tell you about why I own this stock and kind of like thinking about what to do with it going forward. So I own 11 shares of it. You can see my cost basis, how much I made, as well as like some of the return. The main reasons why I'm investing in Tesla is the first reason is Elon Musk. Elon Musk is a genius, and he is the Albert Einsteins of people in the world today. There's not a lot of people like him, and all this man knows how to do is work. When you have a leader like Elon Musk or like a Jeff Bezos, you have to invest in those companies because they're steering the ship in the right direction. You know, a lot of people give Tesla flack for not they don't fulfill their deliveries or the production numbers are underweight. What they don't understand is this is a long-term play where people are looking at short-term outcomes. They're looking at the quarterly reports, and yeah, once in a while they don't hit it. But if you look at over the long run, they're increasing the number of deliveries, the number of cars they're producing. So yeah. So the first reason I invest in him is in this company is Elon Musk. The second reason is their products are superior. With any company, selling your product is the most important thing, and they by far have the most superior product out there. You compare internal combustion engine car to a Tesla, it's hands down, it's not even a comparison. You know, the cost of ownership is lower, the actual value you get in the car, the performance, like you're getting the performance out of these electric cars that are the equivalent of supercars, you know, and you're paying $40,000 to $70,000 for them. So you're getting great performance. The inside of the car is fantastic. You get all these benefits. They're one of the top companies out there with the autopilot. Their moat, their edge over all the competition is that they just have so many more miles than anyone else. Then they have their energy storage business, and they have their solar roof, and then they're going to be producing semi trucks. So they're really changing the game going forward. And you know, it would be wise to think that this company would be doing well forward. Like they have a lot of cash reserve now. You know, every company is going to have a little bump in their financials in the next quarter, but for the most part, this is a solid company going forward. You know, Elon's going to keep innovating, and you know, the product is superior. And when you have a great product, and that your edge is the constant innovation that you're bringing forward, like this company is something that you could possibly look into. Um, if you compare the return of Tesla compared to the QQQ or the ARK, the last reason why I invest in them is the return is immense. So, where did I put it? Oh, I just got to open it up. But if you compare the return of Tesla to the QQQ, Tesla's return is even higher than the QQQ. So when I ran the numbers, their return is anywhere between a 30 to a 54% return. So, you know, my goal is to have a return over 15%, but this return is even higher than that. So QQQ has been, you know, hitting a 15%, 16% return. Tesla's 10 times that. So going forward, does that mean that this company is going to have that kind of return going forward? Maybe, maybe not. But if they hit the numbers that they're supposed to be hitting, like there's a lot of potential for this company. So, you know, those are the 3 holdings I have. You know, the focus is growth, not necessarily dividend investor for this portfolio. So you know what? If you guys got any cool plays that you're looking to growth, um, put it out there. And the whole reason about this or showing you guys this video for this portfolio is to just kind of compare what everyone has. Every person invests differently. And does that mean, that what I'm doing is the best route? Probably not. Is dividend investing the way to go? Maybe that's the way to go. Is dividend ETF investing where you're just picking the dividends and your dividend ETFs and not picking individual stock, is that a better option? Maybe it is. There's no correct answer to anything. The whole point of this video is to give you guys some ideas to like compare and contrast. The best people constantly learn, take information from other places, and hopefully going forward this, you're like, you know what, 75% of my portfolio is dividend stocks. Maybe I should put some growth stocks in there. Like maybe I got my dividend plays, but let's add the growth in there. Or you look at this video and you're like, you know what? I don't like the risk and volatility associated with the growth investing, so I'm just going to stick with my dividend investing. Hope that the dividend growth increases and that my dividend yield increases over time by cost averaging. You know what? That's probably a great route too. And am I saying one method is better than another? Absolutely not. Like, as long as you're putting money away, you are securing your family's future, and that's the most important thing. So as long as you're doing something, that's all that matters. Now, if you're investing in penny stocks, stay away from that. I did that, terrible idea, lost a lot of money doing that. So now I'm just a long-term investor in growth stocks. So if you guys like the video, hopefully put a like down, comment, or subscribe. I'm going to be trying to put these out at least every week, so hopefully we can just go over the gains or loss. It would have been really interesting to if I put out the video on Friday showing that I had a $3,000 loss and I was down like 10%. So it would have been really interesting seeing that perspective, but it just seemed that like I happened to make the video today, which is on a Wednesday, where the market increased pretty drastically. So, I think that the market is still gonna, this is a fluke, and that the market is gonna go down. A lot of people are still not working. A lot of people are either working at home or staying at home, and people aren't spending money. So just kind of going forward, we'll compare it. And the whole point of this video is also to have transparency. I don't want to show you guys just all my green days. I want to show you the days that I'm losing 25%. So, take a look at this. If you guys got anything out of it, like, comment, subscribe. It would really mean a lot to me. And, you guys have a great day, and, keep investing.